Yeah, good morning. Yes, today we will continue with the aspect that we were treating in our last class, which is our withholding task. So we still have one or two notes to still talk about under the withholding task, which we are going to finish up before we go to the computation aspect. So if I could recollect in our last class, we finished at the differences between withholding tax and value-added tax. Am I right? I need somebody to confirm that. So we finish at the differences between withholding tax and value-added tax. Is that right? I need somebody to confirm that to me.
Yes, we spoke about that.
Yeah, yes. So we stop about we were just discussing about this withholding tax. So which is an advance payment of tax that is usually collected at source, which will be which will be available as a set off against subsequent tax liability. So which is the withholding tax. So the next thing now is so we'll go to. Please let us inform your other colleague that the class has commenced so that other people can join. Okay. So the next thing now is as an agent. So after you have deducted the withholding tax now, assuming for instance, I'm an agent for deduction of withholding tax. I have deducted the withholding tax, which I need to remit to the relevant tax authority. After deduction, what is the next thing for me to do is to remit. So by the time I want to remit now, so in what form, in what process am I going to remit that withholding tax to the relevant tax authority? So the process of remitting that withholding tax to the relevant tax authority is what is called what? So the development of a payment schedule. So today we'll be starting with filing of withholding tax or payment schedule. So payment schedule. So this payment schedule is usually a document that is prepared by the agent. It's going to be prepared by the taxpayer, showing the withholding tax, the total of the withholding tax deducted from all sources. It's going to show the details of the withholding tax that the agent deduct from various beneficiaries. As we all know that as an agent, so if you deal with any transaction that attracts withholding tax, you are expected to deduct before payment is being made to the beneficiary. So that amount you deduct, you are going to remit it to the relevant tax authority. So during the process of remitting, that is when you now come up with payment schedule during the process of deduction. So coming up with payment schedule, so that is the document that will be prepared by the agent, showing all the details of the withholding tax deducted during the previous month. So that will show the details of all the withholding tax that was deducted during the previous month. So usually that withholding tax schedule is going to have details of about the withholding, details about all the withholding tax, which is going to be also acknowledged, which is going to be accomplished with accompanied with with either a bank draft or a check with the name of the relevant tax authority. So where the relevant tax authority is FRS, so there's going to be a check that will be drawn that's for the relevant tax authority. Where it is State Internal Revenue Service, a check will also be drawn in the name of in the name of the relevant tax authority. So the examiner may also ask us for the content of this withholding tax. It is very important we know the content of this withholding tax. You don't need to crack your brain. As I already told you, that's what that document is going to emanate from where? From the agent. So that means some of the items that will be in the withholding tax is what? There must be the name and address of what? Of the taxpayer acting as the agent. I'm the agent now that I've deducted. So when I want to pay that withholding tax to the relevant tax authority, that my name will be either what? Either in the bank that I raised or in the schedule. So the name and address of the taxpayer acting as the agent will be part of it. So the person who suffered the withholding tax also, the name and address of the relevant tax authority. So the tax authority I want to remit it to will also be part of the content. The name and address of the beneficiary, the person who suffered the withholding tax, is also going to be there. The nature of the transaction. So what is it rent? Is it contract? Is it commission that was paid? Then the gross amount, the gross value, the total amount, the rate that is being adopted. So all these are needed to be able to know during the process of audit and investigation to know whether the applicable rate were adopted or not. So the amount of tax deducted, the check number, as I told you, well, after preparing the schedule, they are going to raise either a blank draft or check. So the number of that, then the tax identification number, the TIN number of both what? Of both the agent and the beneficiary. Then the date of the payment. So the date of the payment. So then this withholding tax. So those are the content. This withholding tax, we need to note. It should be noted that a schedule must be drawn for every relevant tax authority, because each tax authority will have to issue a withholding tax credit note to each beneficiary. Yes. What that means is that assuming a company deal with a taxpayer who is resident in Ogun State, and that company also deal with another taxpayer who is also resident in Lagos State, in the same month, what that means is that the withholding tax deducted from each of these taxpayers, the one relating to Lagos State must be remitted to Lagos State Internal Revenue, and the one relating to Ogun State must be remitted to Ogun State Internal Revenue, and those relating to FRS must also be remitted to Federal Inland Revenue Service accordingly for each month. So that is the way the withholding tax schedule works. So it shows the details of all the transaction relating to the withholding tax. So you may be asked for the content. So those are some of the content of the withholding tax schedule. Okay.
So,
You have a
sorry,
question?
I have a question there. Yes.
Okay.
So that means if we are giving a job to a company in Ogun State and we are in Lagos and we deducted withholding tax, so we have to remit it to Ogun State tax authority.
No, not what I mean is not when you are giving. If it is a company now, if it is a company, we all know that the withholding tax relating to company is payable to which relevant tax authority?
FRS.
FRS, yes. So see, if it's a company, whether the company is in Ogun State or the company is in Oyo or anywhere in Nigeria, the withholding tax on that is payable to FRS. So any FRS office, so you can make the withholding tax by paying to the bank. So through the bank, because this schedule is usually done. You don't need to go to the relevant tax authority. You just visit the bank with the schedule. The bank will give you what. So we collect it from you and also acknowledge the payment from you. Then one thing, so what you are saying, assuming that's in the case of federal, assuming the beneficiary is not a company now. Let's say the beneficiary is an individual. You the agent, let's say you the agent, you are now in Lagos. Are you getting me? You are in Lagos. Your company is in Lagos. But the beneficiary, the person an individual who renders services to you, let's say an enterprise who renders services to you, happen to be what? A resident of Ogun State. After deducting that withholding tax, please, you are not paying that withholding tax to your own resident company. You pay it to the resident of that individual, which is what? Ogun State Internal Revenue. Is that clear to you?
Yes, okay.
So it has to be paid to the resident of what? Of the individual accordingly. So where you have what? The individual that are resident in various states, you have to remit it to what? To each of their what? State internal revenue of residents. Then after presenting this schedule, that the tax authority has collected the money, the tax authority must also show something. They must also present something to you that, so yes, truly, we collected money from where? From this agent. Because that's showing, giving you that document, we also show that, yes, truly, you have remitted that withholding tax to the. Is what is called what? Credit note. So that will now lead us to the next one, which is what? Withholding tax credit note. Withholding tax credit note. So it's a document that will be what? That is presented by what? By the relevant tax authority. So it is what? It is issued by the relevant tax authority to every beneficiary. It's going to be issued by the relevant tax authority to every beneficiary as evidence of what? Of withholding tax payments. So after the agent has submitted the payment schedule with what? With evidence of payment with the bank draft or the checkbook check. So the relevant tax authority, after acknowledging the payment, they also what? They will issue what is called what? Withholding tax credit note. So that withholding tax credit note now is not going to be in the name of the agent. It's going to be in the name of the what? Beneficiary. So that will now show that truly the agent has what? Has remitted an amount of what? Of withholding tax to what? To the beneficiary. So that is how so that will show that yes, truly they have collected. So that credit note now, they have collected or withholding tax. That credit note now is what the beneficiary, the taxpayer, is going to use to present to reduce its tax liability. Nowadays, it's not very simple because most of these tax authorities, they use what? They use the technology. So whenever you are paying, whenever any agent has paid, especially for federal inland revenue, whenever any agent has paid for your withholding tax, that will automatically reflect on your what? On your own tax promas, where you are what? Where you are a registered what? Where you are a registered what? A registered company with the relevant tax authority, and you're also registered on what? On the tax program. So the credit, the withholding tax credit note will automatically show that what? You have what? A credit note to claim from the tax authority. So this credit note now, it's not going to be given to the beneficiary, it's going to be given to the agent. After the agent has now collected it, the agent will now transfer whether it is the name of the what? Of the beneficiary. So that is what the withholding tax credit note. Also, when you are making that payment, when you are doing the schedule, so where the beneficiary has no TIN number. So TIN number is usually what? What TIN number is? Tax identification number, which is usually issued by the Federal Inland Revenue Service to show that what? A taxpayer has registered with what? With the relevant tax authority. So that money will show that the taxpayer has registered with what? With the relevant tax authority, which is what? So that is the TIN number. So that TIN number will show evidence of what? Of register. Sorry, I think I have network issue. Can you hear me now?
Yes, sir.
Yes.
Okay, so there was network issue. I think I'm able to solve it now. So, yes, as I was saying, that the withholding tax, so that's withholding tax credit note now is so where the taxpayer does not have a TIN number when you are doing that schedule. So you shall provide, so such shall provide what? NIN. So you are going to use what? NIL in the case of what? Individual, national identification number. Then you also use what? RC number in the case of what? A company. So that is for where during the process of payment of what? Of the withholding tax, where the taxpayer does not have TIN number, as I was explaining. So that is what? Tax identification number, which is usually used when you register with what? With the relevant tax authority. Mostly at the federal level, they adopt what? TIN number. While the TIN number at the state level, some states, they use what is called what? Payer ID. So it's the same thing as what? As the TIN number, but depending on what? On what the state internal revenue adopted. So some state internal revenue, they adopt a payer ID, but at the federal level, you have a tax identification number. So where there is no TIN, so you use what? NIN for individual taxpayer and what? RC, registered company number in the case of what? A company. Then, so where a person issue a receipt for any amount deducted, but yet to be remitted to the relevant tax authority, the beneficiary shall be credited with the amount unremitted and shall be treated as tax liability in the hand of the agent and shall become recoverable with applicable penalty and interest. So that was in our last class, we treated something about offenses, where I told you that where you deducted withholding tax, it is expected that you remit. But where you did not remit, the tax authority is not going to fight you for what? For the amount of the remitter. They will charge you for what? Administrative penalty plus what? Plus interest. So that is what this is also being reiterated here. That's what. Where you have deducted a withholding tax and you issue a receipt that, okay, yes, we have deducted a withholding tax, but you fail to deduct that withholding tax. So that receipt will be what? Will be assumed that withholding tax amount. The beneficiary will have a right to what? To be credited with what? With that withholding tax credit note. Then, but the tax authority, so we now go after what? The agent to what? To recover back the withholding tax, which will be applicable with what? With penalty and interest. Then this credit note also, you may also be requested, ask for what? For the so we may also be requested for the what? So we may also be requested for the content of this credit note. So they are also similar to that of what? To that of payment schedule, but it differs. So what are the content? So the credit note number, there must be a number. The name of the taxpayer who deducted and remitted the withholding tax. The name of the beneficiary from whose invoices withholding tax was deducted. The name of the tax authority, the relevant tax authority will also be there. The nature of the transaction, date, name of the bank through which remittance was made, the amount of withholding tax suffered, the gross amount. So all those information that are also included in the work payment schedule, some of them are also part of the credit note. So the credit note will show the amount of the withholding tax that you paid. So what is the amount of the withholding tax that they deducted that you have credit upon? So all those information will be part of what? Part of the withholding tax credit note. So the examiner may also ask you. So most time the examiner usually asks for what? For the content of what? Either what? The payment schedule or the withholding tax credit note. So it is stated to that one, it is important to emphasize that the presentation of a letter from collection agent showing that a taxpayer has suffered deduction is not enough for FRA to grant withholding tax credit. So where this is usually common with the government ministry, agency, and parastatals, because they are also what? Agent for deduction of withholding tax. Most of these government ministry and parastatal, after deducting the withholding tax, instead of them to remit it, they fail to remit to what? To the relevant tax authority. What they now do is that they now present a letter to what? To the beneficiary that yes. So this letter we just show that okay, they have deducted so amount from the beneficiary. So what the law is saying is that this particular information does not give what? The beneficiary the right to say, okay, is having what? A withholding tax credit note. FRS can still disregard such letter. Then also similarly, government treasury receipts issued by other government departments showing that they have deducted tax from the taxpayer is not enough to grant credit, since only the FRA can collect tax for what? federal government, and we therefore issue credit note. Also, some of the government ministries, instead of giving letter, they also give receipt that shows that, yes, we have deducted money from this particular taxpayer. So that's receipt given by the government agency also does not constitute what? Issue a withholding tax credit note. So each state government is expected to design form that will enable credit to be granted to those from whose income tax has been withheld. The law says that what? So because the way state government operates differs, the way some states internal revenue operate is not the same, unlike the FIRS, which is uniform. But some state government uses what? Technology. Why some? They are still using what? The manual form. They are still using what? The paper form. So it is expected that each state government, each state internal revenue must develop what? The method that they want their withholding tax payment schedule to be made, and how withholding tax credit will be granted to the taxpayer. So that must be developed by a state government through their state internal revenue service for the purpose of granting withholding tax credit to taxpayer. So those are the element that you need to know as far as withholding tax credit note is concerned. Then what are now the advantages of this withholding tax? So it's very simple. It enhance voluntary compliance. So they don't need to force you. It is voluntarily. So it is statutory on the person making the payment. So when somebody want to pay you rent now, if the person is an agent, so it is voluntary. So it makes you to voluntarily pay tax. It creates more awareness on taxation. Somebody that does not have knowledge of taxation, where a bank is paying you interest. So when the bank wants to pay you interest now, they now deduct withholding tax. That will make you to ask questions that, what is this one again? Why? What is this one for again? So that with that, you'll be able to get to have information about taxation. It reduces the incidence of tax evasion. So tax evasion is a process that is usually adopted by taxpayer to voluntarily not decide not to pay tax. So taxpayer may voluntarily decide that they don't want to pay tax. But this withholding tax will reduce the incidence of not paying tax, because that amount will be deducted at source. It tends to bring unknown taxpayer into the tax net. With that, government will be able to have a broader tax net. It makes tax payment less cumbersome to the taxpayer, who may not bother going to the tax office to pay his tax because they will have deducted it at source. It tends to bring obscure transactions into the tax. Some transactions that are carried out without books. So this withholding tax will make it to be traceable. It tends to strengthen the tax machinery by engaging numerous official collecting agents in tax work, even though they are not government workers. So those agents, the government that want to collect on behalf of the government, they serve as agents. So by helping the government to collect tax. So as a result of all the above, tax collection, we told you that we make tax collection to become cheaper. So those are the advantages. So we also have everything that has also have disadvantages. So what are the disadvantages? High rate of withholding tax is likely to affect operational performance of most businesses. Some businesses, they may end up having withholding tax credit notes of a larger amount that they will not be able to utilize because they don't have enough tax to pay. So and they have already suffered high rate of withholding tax. So the application of withholding tax affects cash flow. It may also affect availability of funds. So it is likely to discourage hard work by revenue because tax officials, once they know that maybe the person that want to make the payment will deduct the withholding tax, that may discourage them from putting more work. So because of the withholding tax was self-accounting in nature. It leads to locking up of capital in some businesses with the revenue agency. So money that is supposed to be used for other activity, the revenue will have collected it as source from the taxpayer. Bureaucracy in the process of claiming withholding tax. Before now, to claim withholding tax is usually a cumbersome process. So, but now because of the technology that is being developed by the tax authority is now what? Seamless now. So as I told you, at the federal level, once any taxpayer has paid on your behalf, that will automatically reflect on your what? On your tax promat, on your tax promas. Appropriate withholding tax rate to apply. So in some cases, tax agents are dilemma. They don't know what are the rates to be adopted for what? For each category of what? Of transaction. So it's also what? It's also a major problem. That's for withholding tax. So penalty for the failure to deduct. So some taxpayers, they don't have knowledge. So they don't have knowledge that, okay, if they fail to deduct, so they will be liable to penalty for failure to what? To deduct what? Withholding tax. So as a result of that, so those are what some of the advantages and disadvantages of what? Of withholding tax. So any question? So any question? Any question?
Yes, I have a question. Sorry, hello.
Okay. Okay.
Mm, regarding withholding tax, I deal with businesses that vendors most times deduct withholding tax. Well, my first question goes to those agents, those big agents, for instance, banks and some oil companies. Now,
Okay.
for banks, because when we deal with them, they tell us that okay, they don't pay. We understand that they don't pay VAT. Okay,
Yeah. Okay.
but some of them goes
They
fast
don't
telling us they don't
they
pay
don't
VAT.
pay VAT. Okay.
They remit VAT directly to the government.
Yeah.
So when we are giving them invoice, they give us the appeal without VAT. So when we
Okay.
give them invoice, they tell us that we should ignore the VAT aspect because their payments will not reflect the VAT, that they will remit the VAT on our behalf. So what they give to us after remitting VAT, I think it's just their normal remittance of VAT from their end. But my question goes to the withholding tax itself because some organization, for instance, I had one this week. It is an energy, what's it called, oil company. So
Oil
what they
and
did,
gas.
yes, oil and gas. What they did is that we sold a product to them, so they end up not paying VAT at the same time, still deducting withholding tax. So I hope you understand. So the
So,
payment
they are making payment to you.
exactly. So, but the payment they made
Okay.
did not include
Okay.
VAT, as
They
well
did
as
not
also
include VAT.
yes, as well as it also deduct 2% after
Maybe,
the
you
VAT.
know what, there are some transactions. What you need to know is that there are VAT and withholding tax are different aspects. They are not the same. VAT is what?
So
Consumption tax.
7.5.
Yeah, yeah. It's apart from the rate, VAT is consumption tax. When you consume certain goods and services,
Yeah.
you are liable to pay VAT. But withholding tax is not consumption tax. The withholding tax is what? Tax on what? Income. Income. Tax on income. If what you are, so under the VAT, there are certain items that are VAT exempt, that are not liable to VAT. Where those items, if those items, the transaction that you enter, your company and the oil company, the transaction that both of you entered into, if that transaction is what? Exempted from VAT, that means they are not going to what? Charge that transaction for VAT. But that does not mean that what? It will not, withholding tax will not be what? Applicable to, because the withholding tax is on your what? Income. So that's the reason why they may not charge VAT, but they are going to charge you withholding tax. Because of withholding tax is on what? Income. Why VAT is on what? Consumption.
Okay. But my what's it called? We are a bit confused is that why some oil company do that, some other oil company, because the problem I have with this particular one is that when they paid the money, they
Okay.
paid it was without VAT, but at the same time they went further to deduct extra 2%, which was withholding. So they now told us that because what we said is actually a vatable item.
Yes, if it's you know that the VAT they are going to pay you, they are supposed to, so what, by the time you enter into transaction, when they want to deduct that transaction, VAT now, this is it. This is where you are missing it. Okay. You provide services to them, Abi? to that company. You
Yes.
provide
Totally.
services, you sold goods to them,
Yes.
So they have to pay you.
Yes.
You that you are selling goods to them, it is your own duty. On that your selling price, you are supposed to charge VAT on that your
Yes.
selling price. Are you
Sure.
getting it?
Yeah.
Then why the oil company, when they want, by the time they want to pay you your money, they are to deduct what? Withholding tax. The
Yes.
VAT is supposed to be charged by you, not by the company, not by the oil and gas company.
Yes.
So my question now is, why is your own company not charging it?
No, we charge, like I said, we charge the VAT.
Okay.
But it's because I've encountered this quite a few times, okay? Because sometimes
Okay.
we deal with some of these banks, different banks, and for the banks, I understand that they don't pay VAT at all. They remit to the government because that's
Yeah.
what they do. But my issue with this particular one is that they did not remit the VAT because they are telling us they are going to pay it. They are agents of government, so they will pay the VAT to the government. But the withholding tax, they also
Okay.
deduct 2% of the withholding tax, which they are telling us that they will remit to FIRS, and we will get the credit note. Of course,
The credit note.
I know how to get the credit note from Tax Promise. But
Yes.
the issue now is, are they meant not to pay VAT at the same time on a VAT bill, because my invoice is VATed?
According to the tax law, they are expected to pay the VAT on that item. But because if they are also agents,
Yes,
the
that's
tax
what they
law also, if they are also agents, the tax law also gave them a right. They may also withhold that VAT, where they find out that there is also what we call a self-accounting provision under the VAT law. So they may also self-account for that VAT. Since they are oil and gas company, so most especially for oil and gas company, they can what? Self-account for those VATs. So they also have a right to do that. So that principle is called a self-accounting provision.
Do we have any specific provision that lists out those companies that should withhold VAT at the same time? That's those companies that are agents that can withhold tax, because many times I have to drag with these people, but because of the fact that I understand that some companies are there, but I've not laid my hands on any section or any provision that fits everything.
What the law says is that in the case of withholding tax, when we did deduction of withholding tax, I told you that any body, corporate or unincorporated, except what individual like you and I that are not. So what the law says is that anybody that is engaged in business who operates the payee scheme, if you are engaged in business and you have what? Employee. So for having employee, that means what? You are going to be what? You are going to be keeping record of your activity. You are expected to what? To withhold VAT. But in the case, you are expected to deduct withholding tax, sorry. But in the case of VAT, for VAT deduction, VAT deduction relates to any agent who deal in transaction above 25 million. If you are dealing in vatable goods and services, that is above 25 million naira per annum. So you are expected to deduct VAT. So once you deal in any transaction annually, and you know that transaction is going to exceed 25 million naira, it is expected that you must deduct what? Value added tax and what? And after deduction, you remit to what? To the relevant tax authority. But the relevant tax authority also gave some taxpayer the right to what? To self-account. The reason why they self-account is they find out that most of the company most of the taxpayer that they deal with, those taxpayers may not end up remitting that VAT. That is why the tax law gave them an opportunity to also self-account. That principle is called self-accounting provision. We are also going to treat it when we get to value added tax. So when we get to value, so we'll be able to you will be able to have a good understanding. So that should be our next topic after this week.
Yeah, hold on to that. No problem. Thank you.
So any other question?
Not really. Okay. Okay, not really. Oh, sorry, before I go, the last one I want to ask, because I know I get credit note from FIRS portal. That's from Tax Promax.
Tax Promax, yes.
Yes, for those who remit their
Who remit?
yes, who
Yes.
remit our withholdings. I get credit on from there. But my issue is for LIRS because LIRS withholding tax has to do with enterprise.
Yeah, enterprise, yes.
Yeah, so for enterprises now that deduct this VAT because my problem with most enterprises is that for my own company they charge us VAT.
Okay.
So and at times because we have tax consultants as well as even the tax officials, FIRS and stuff. So we went for a meeting and they were telling us that for those particular ones that don't charge us VAT, that we should charge ourselves and do the
Yeah,
deduction.
that's self-accounting. Yes,
Yes,
yes.
that's self-accounting. So my problem is for those companies that don't even charge us VAT, if we go ahead to deduct the VAT, how do we remit? Since they don't even
Ah,
dedicate VAT.
that principle, that is what they call you are going to remit it differently from your normal VAT. It's going to be a different remittance.
Okay,
You are
so
not going to remit it with your, yes, you are not going to remit it with your normal, if you charge VAT now, because they are not supposed to deduct, so you're now charging. When you want to remit it, you are not going to remit it with your normal VAT. It's going to be remitted separately.
WST.
Yeah, yeah. So it's going to be remitted separately. So I think where you are missing it up is that VAT and withholding is not the same.
Sure, I understand. I get that.
So if it is withholding you want to remit now, you remit it to what? Appropriate relevant tax authority. But if it is VAT, VAT is remittable to only FIRS.
I get that. I understand that.
So no, for withholding, it depends on what? The tax authority of what? Of resident of what? Of the taxpayer that will determine the what? The relevant tax authority. But in the case of what? VAT is what? Only to what? Federal Inland Revenue Service.
Thank you, sir.
Yeah. So we are going to go to the question. So we have some questions in the material, so which we are going to look at. So we have the first one, practice question on page. I hope you can all see my screen, Abby. Hello, can you see my screen?
Yes.
So we are starting with the first one, question number 1. So this question number 1, we are going to answer it by ourselves. So I expect us to give me the question as we get to give me the answer, as we get to the question. So the question goes thus: the administration of withholding tax is the responsibility of appropriate relevant tax authority. State the relevant tax authority responsible for the administration of the following: 1, company; 2, firm; 3, resident of FCT; then 4, professional; 5, individual; 6, Nigerian ambassador in Beijing, China; 7, UK ambassador in Nigeria. So now to the solution. So who is the relevant tax authority for withholding tax deducted from companies? Withholding tax deducted from companies. Relevant tax. Yeah?
FIRS. Sorry.
Yeah, FIRS. So that is the answer. So for the first one, Roman figure 1, federal FIRS. Then Roman figure 2, firms. Withholding tax from payment deducted from firms. Who is the relevant tax authority?
I think it's the State Revenue Service.
So one thing you need to ask yourself is, what do they mean by this firm? So what is a firm? When they say firm, what is a firm? So that is the question you need to first of all ask yourself. What is a firm?
Like a sole proprietorship business.
Are you sure? Firms are what? A group of companies operating in the same industries. The group name is called a firm. So they call them, group of companies operating in the same industry are regarded as well firms. So who will now be the relevant tax authority for firm? If they are a group of companies operating in the same industry. Oh yeah, now group of companies operating. FIRS. Then number 3, resident of Federal Capital Territory, Abuja. Resident of Federal Capital Territory, Abuja. Who is the relevant? Are you sure? We did it too. We
Yes.
talk about. Are you sure? No. It's what? FCT IRS. I told you. Federal Capital Territory IRS. FCT, Federal Capital Territory Internal Revenue Service, which is under what? The Federal Inland Revenue Service. Then Roman figure 4, professionals. Professionals. Who is the relevant tax authority?
I think for professionals, it will be the state.
Yeah, because professionals, they are usually what? Firm of what? Firm of partnership or firm of what? Enterprise. State Internal Revenue Service. Individuals.
Now, what is that professional is all this expatriate?
Yeah, all this firm. So they are usually firms of what? Firms of partnership or firms of what? Enterprise. Professionals. So State Internal Revenue Service. Then individuals.
State Internal Revenue Service.
State Internal Revenue Service. Then Nigeria ambassador in Beijing, China. Nigeria ambassador in Beijing, China. Oh yeah, Nigeria ambassador in Beijing, China. Is what?
So let me try that. I think it's FIR since they are like federal official.
Okay, because what? So it is FRS. The reason being that that person is what? Is member of what? Foreign affairs. Is a member of what? Foreign affairs. The UK ambassador in Nigeria.
The UK ambassador in Nigeria, I think, will be exempted since they are like an immunity.
So they are diplomats in Nigeria. So they are going to pay tax to what? To their own what? Home country of what? Of resident. Because they are not what? Resident of Nigeria. So they just come to Nigeria to what? To come and what? To come and foster what? Cordial relationship and trade between what? Their country and Nigeria. So their tax authority will be what? Their state country of what? Country of residence. So will be what? Their relevant tax authority. So you may be asked to state what? The relevant tax authority relating to what? Certain taxpayers as regard to what? Withholding taxes. So those are the relevant tax authority. Then we now move to the second question, which is question 2. So we just started. Nigeria Limited has been trading for many years, making up its account to 31st May annually. The financial statement, the financial result for the year ended 31st May 2020 and 2021 as adjusted for tax purposes were as follows. Year ended 31st May 2020-2021, we have in 1,000. Trading profit, bank interest received net, gross, debenture interest received, dividend received from Grace Love Limited net, dividend paid to shareholder gross. You are required to A, determine the net withholding tax payable or receivable by we just started Nigeria Limited, arising from its activity paid and received by it. Then B, compute the company income tax liability for the relevant year of assessment. Ignore capital allowance. Note, assume tax rate to be equal to 20%. So we are told to assume tax rate to be equal to 20%. So we can now, so in order to solve this, you are the first to determine the net withholding tax payable or receivable by, we just started Nigeria Limited, arising from the activity paid or received by it. So withholding tax payable or receivable. So we are going to, so let me upload our, as we have the name of the company, the name of the taxpayer, very important. So we have it as we just started. Nigeria Limited, computation of withholding tax payable or claimable. for relevant year of assessment. So the withholding tax will be on what? Actual year basis. But why the tax liability will be on what? Preceding year basis. So the withholding tax will be payable for 2020 and what? 2021 year of assessment. Why the tax liability will be what? On preceding year basis. So withholding tax will be what? 2020 and 2021 year of assessment. So we now look at the question to know which of the transactions will give rise to what? To withholding tax. So in the case of the first one, we have a trading profit. The profit made by an entity, is it liable to withholding tax? Trading profit, is it part of the transaction that attracts withholding tax?
Sir.
No, no.
No, sir.
No, it's what?
No.
So it's going, that is what they are going to pay tax on. So that is the
Yes.
item they are going to pay their main tax on. So that is not subject to withholding tax.
Withholding
The
tax.
bank interest received net. Bank interest received net. Will that be subject to withholding tax? Bank interest. So you now look at, is interest part of the transaction that attracts withholding tax?
Yes, sir. It is. It's part of.
It is part of the transaction. So the next step for us is what you now look at, what is the rate of the, so interest
10%.
received. So 10%. So the rate is what? 10%. So which is what? For the bank interest received. So next thing for you now look at what category of withholding tax will this bank interest received give rise to? What category of withholding tax will it give rise to? What category of withholding tax will that bank interest received give rise to? You know, we have two types of withholding tax. Which are what? Who can remind us?
Individual and company.
Two types of withholding tax. We have a withholding tax payable and a withholding tax claimable or receivable. Yeah. So this bank interest, what category of withholding tax will it give rise to?
Claimable.
Claimable, yes, or receivable. So it's going to give rise to what? Withholding tax claimable or receivable. So any one of it, you can do it first. So I have withholding tax claimable. So we have it, withholding tax claimable. So we have a bank interest received. So we are giving net. What that means is that what, since we are giving that information net, what it means is that what, instead this company we just started did not collect the full amount of that what, of that income. They only collect what? Amount less withholding tax. So that means they are supposed to collect 100%, but they collected what? 100 minus withholding tax. 100 minus 10. So that means they collected how many percentage? 90%. So 90%. So to calculate the withholding tax, there are two ways that you can adopt. It is either you first of all, so in my workings, it is either first of all, working one, bank interest. It's either first of all gross up that amount. Grossing it up means that I want to make it to become 100%. So that will be 100 divided by 90 multiplied by the value. So the first value for 2020 happened to be how much? 720,000. Abi? So multiply by 720,000. So that will give us how much? So that should give us how much? That gave us how much? Somebody should use calculator now. So that will give us a value of 800,000. 800,000. If the total value is 800,000, that's the total gross amount, and I collected 720. So that means the withholding will be equal to the gross amount, which will be 800 minus 720,000. So the withholding amount will be how much? 80,000. 80,000. So for the first one, withholding 2020, withholding tax is what? 80,000. So in the case of the first one, the withholding amount is 80,000. Then, or instead of doing that, you can also calculate the withholding tax straight away. You know that the withholding tax rate is 10%. You can say 10 divided by the value you got, divided by 90, multiplied by 720,000. So that will give us this total, this withholding tax amount of what? 80,000 naira. Either way is allowed. Either way can be what? Can be adopted. So that will give you the 80,000. You also need to do the same thing for what? 2021. 2021, you gross it up, 100 divided by 90, multiply by 100 over 90, multiply by how much? 1,080,000. 1,080,000. So that will give us a value of what? 1.2 million. So the withholding tax will now be equal to 1.2 minus 1,080,000. That will give us how much? 120,000. Or you can say 10 divided by 90 multiplied by 1,080,000 naira. So that will give you this value of what? 120,000. Either way, that favors you, so can be what? Can be adopted. 120,000 naira. So that is for bank interest received. After the bank interest received, so the next thing we have in the question is what? We also have the next thing in the question we have what? Gross debenture interest received. If you look at the word there, we have a gross. Yeah?
That's how you got the 90.
How we got what? 90. Yes, you are supposed to collect 100%. But you collected what? Less withholding tax. So that means what? And the withholding tax rate that you suffered is 10%. 100 minus 10 will give you the 90. So the second, we have a gross debenture interest received, gross. So this indicates that this amount was collected in full. So that means what? Because they collected this amount in full, they cannot claim any withholding tax on it. This amount was collected by the company in full, which indicates that what? Withholding tax cannot be claimed on that what? On that money, because the debenture interest amount is 400,000. They collected the entire 400,000. So that means what? They don't have any withholding tax credit, no, because they did not solve. It was stated what? Gross. So the gross means that what? The full amount is what? Collected. Then we also have the next one, dividend received from Grace Love. What category of withholding tax will dividend received also give rise to? Dividend received, net. What category of withholding tax? Yeah?
Withholding tax claimable.
The same thing. Withholding tax claimable. So dividend received, we also have with dividend received, another withhold dividend received. So the same way, working two. So that will give us, what's the withholding tax rate on dividend?
10%.
10%. So that means what? We also collected what? 90%. So you gross it up, 100 over 90 multiplied by 360,000. So that will give us how much? 400,000. Abi? The withholding tax will now be equals to 400,000 minus 360,000. So that will give us how much?
40,000.
40,000. Or you can say 10 over 90 multiplied by the net amount. Multiply by what? 360,000. So that will give you the what? The 40,000 naira. So we have the same value. So that means we have 40,000 here. So we have 40,000 here. So we also have 40,000 in the other, in 2021, 40,000 as well here. So that is what withholding tax what claimable. After that, the next transaction we have happen to be what? Dividend. The next one happen to be dividend paid to shareholder gross. Dividend paid to shareholder gross. Dividend paid to share. So what category of withholding tax will this give rise to? You are making payment.
Withholding tax payable.
Withholding tax what?
Payable.
Payable. To give rise to withholding tax payable. Dividend paid. So we have what? Withholding tax payable. So we have the next one, withholding tax payable, which will be dividend paid. So working 3 will give us dividend paid. So the withholding tax on dividend is what? 10%. And this one we are giving it as well, gross. That means what? We are giving the entire value. So it will be 10% multiplied by what? The gross amount, which is what? How much is the first one? The first amount is what? 2 million and 3 million. So multiply by 2 million. So because we are giving the gross amount, so that will give us 200,000. So the second one will be what? 10% multiplied by the gross amount, multiplied by 3 million. So that will give me 300,000. So dividend on withholding tax, so we have 200,000 and what? 300,000. So can I? So this will give me total for this. Total for this, which is 120,000, and this will give us 160,000. So why this? So can we deduct this withholding tax payable from the withholding tax claimable? Can we deduct it?
No.
They are what? They are to be treated as what? Separate item. So this will be what? This will be claimable, while the other one will be what? Will be payable. So they are not to be what? They are not to be set off against one another. So you have to treat them separately. So you cannot say them. You cannot say because you want to pay 300,000 and you want to claim 160 here. So let me remove this 160 and pay the government the balance. No, it's not allowed. So pay what is due and claim what is due to be claimable. So that is what, in case of what? The withholding tax. So that is not the only thing that the question asks us. So the question still proceed further to ask us for what? B, compute the company income tax liability for the relevant year of assessment. Compute the company income tax liability for the relevant year of assessment. Assume tax rate to be what? To be 20%. Assume tax rate to be what? To be 20%. So in computing that, you also have the name of the company. So very important. I told you we just started. Nigeria Limited. Computation of tax liabilities for relevant year of assessment. So in the computation of the tax liability, so we are going to use what? All their information. So the first item we have from the question happen to be what? Happen to be trading profit. So the tax liability will be payable on what? Preceding year basis. tax liability will now be payable on preceding. So year of assessment will now be 2021 and 2022. So the withholding tax will be deducted on actual year, but you are going to use it for claim in what? In preceding, so in the what? In subsequent year. So that means when you now want to, so they are going to deduct the withholding tax from you this year. So they have deducted it this year. So when you now want to pay your tax in next year, tax liability for transaction that you carry out this year, so you now use your that withholding tax that you suffer this year to claim what? Tax in what? In subsequent year of assessment. So we have what? Trading. So trading profit. All these figures are in so trading profit. We have what? We have 5 million and 7 million. So we have 5 million and 7 million. 5, 2, 3. After trading profit, we have what? Gross interest received. Interest received is also an income. Interest received. So this interest now, that interest received now, you are now going to what? Bank interest received. So, sorry, bank interest received. Bank interest received. So when you are stating this bank interest received now, you are going to state the gross amount. Bank interest received. It is the gross amount. So in bracket, you now put gross. It is the gross amount that you are going to charge to tax, because that gross amount is your entire income. So the fact that you have deducted withholding tax, when you are charging him to tax, you state what the gross amount. We calculated it here the other time. Bank interest gross for this one is 720,000 from this working, for this 720 from here. No, okay, sorry, 8.2 million. So you state the gross amount, because the gross is what? Is his income. After the bank interest received, we have what? Dividend, gross debenture interest received. That was given to us gross. Debenture interest. Debenture interest received. So the gross amount, gross. So gross amount. So we have that to be 400. So you have it as what? 400,000. 400,000. So after that, we have what? Dividend received from Grace Love Limited. Net. So you also put the gross amount. Gross. So we calculated it here. Gross amount to be what? 400,000 here. So you put it there, 400,000. 400,000.
Sorry, sir. Let's
Then
abbreviate
after that,
the venture interest
we
as
have what?
DEB.
Dividend paid to shareholder. Is that an income?
No.
Debenture interest. Okay. And now DEB. Okay.
EB. Let's use B, yes.
Interest
Yeah,
received. Gross.
yeah.
D
Yeah.
what? It's okay like this now. Debenture.
It's okay. Yes.
So we
okay.
have dividend received. Dividend to shareholder. Is it an income? Is it an income to the company?
No, it's an expense.
Dividend paid to shareholder is an expense. So it's not an income. So they are not going to pay tax. It's the shareholder that will suffer with. So those are the income. So you add up all this income to the totality of all the income. So you add everything together to get your total income. So this will give us total income. Out of this income, there is a particular income that is what? Frank investment income. Which income is frank investment income? Yeah, out of all this income.
Dividend.
Which income is frank
Dividend.
investment income? Who can remind us? I mentioned it last week. Dividend. Thank you very much. So dividend is frank investment income. And I told you that frank invest final tax is not going to be available for what? For subsequent tax liability. So that means dividend is what? Is a frank investment income. So the withholding tax on it is final. So we must eliminate it. So you said what? Less what? Dividend received. So which is what? Frank, you eliminate the dividend in jacket 400,000. So you also eliminate it here in jacket 400,000. So after you have eliminated that, so you will now get your what? Your total income or taxable income. So you now get your taxable. It can be taxable or they call it a total income, which should be subject to tax. So this will give us the taxable of total income. This will give us 6.2.
Yeah.
So why this will give us what? 8.6. So this will give us what? The total taxable subject to tax. So we are told to assume tax rate to be how many percentage? 20%. The question says we should assume what? Tax to be what? 20%. So you now say CIT, this is a company, they are going to pay company income tax at 20%. So you calculate 20% of 6.2. So we give us, so how much do we have? 20% of 6.2. 1,240,000. So you also calculate 20% of 8.6. So 1,720,000. Out of this, so you now say less withholding tax claimable. Out of this, we have a withholding tax claimable from what of total of what? 120 year and 160 year. But out of this 120 and 160, that is a frank investment which we have eliminated here because what? That income will not be what? Subject to what? Further tax liability. So the only one that will become claimable now is only what? The one on bank interest and what? And the one on what? On only the one on bank interest will become claimable. Bank interest received. So only that will become what? Will become claimable. So which is what? Which is 80,000 and 120,000. You less it because they have suffered that tax before. So you now less it from 80,000. So you less it from this amount and what? Yeah, we have it as what? 120,000. So you less that amount to get. So the resulting figure will now give you final tax liability. So which will be what? So equals to this plus this. So we give you this. So which will be also what? The so that will be what? That will be the final tax liability, which is what? Which is what we are expected to calculate. So that is what the examiner expects from you to calculate as far as well, as far as this question task too. So which is what we have here. So you can see the solution is also in the material. So we have the withholding tax payable and the one for receivable or claimable. So we have it. Then we also have the tax liability. So that liability will be on what? On preceding year basis. So that is what? Computation of the withholding tax. So any question on the computation?
Yes, sir. I have one question. That withholding tax payable.
Any question?
Yes.
Okay.
The withholding tax payable.
Yeah.
You know, it's going to be the shareholders that will
Okay.
pay that. But you know, before the company can pay them, the company is supposed to deduct withholding tax from it. So how will the company pay down?
It's not the shareholder. It's not the shareholder that will pay it. Hello, it's not the shareholder that will pay it. It's the company that will pay it on behalf of the shareholder are the one that will suffer it. Not that the shareholder
Yes,
will
that's
pay
what I
it.
mean.
The
Yeah, that's
shareholder
what I
are the
mean.
one that will suffer it.
Suffer it. So that one
Yeah.
that we deduct.
The shareholder will suffer it. Yeah, that one. By the time, look at it now. Yeah, by the time the company want to give them their money, the company will not give them. You know, their money happen to be. Will not give them the total of this money. So the company will give them this money 2 million minus 200,000, which is 3 million minus 300,000, which is 2,700,000 a year. So for both years. So that is, so the company is going to deduct that amount before paying them. The amount is the total value. When you say total value, so net amount. So after the company has deducted it, so in the company, it's withholding tax payable. So the shareholder, they will go and use this information for what? For the shareholder, because we don't know their name. So we are only concerned about what? About this company. Yeah. Is it clear to you now?
Yes.
So that is in the case of that. So any other question? So in the absence of no question, so we move to the next question number 3. So we have a Global Legend Logistics Limited. It's a company that renders logistics services to financial institutions in Nigeria. December 31st, 2020 is as follows. We have income, contract of supply, equipment fee, interest received. We have expenses. We have payment to supplier, management fee paid, to administrative expenses, legal and professional fee. Note: the total withholding tax credit notes available to the company was compute the withholding tax remittable and the relevant tax authority. Compute the withholding tax remittable and state the relevant tax authority. So we need to work. So for this company now, so global now asks us to calculate the withholding tax remittable. So this is what the withholding tax payable. So what they mean by that remittable is what the withholding tax payable to the what? To the relevant. So in order to calculate this withholding tax, so we have the name of the company, Global Logistics Limited. Logistics Limited as payable and relevant tax authority. So to know the will be gotten from where? From their expenses. The withholding tax payable has already been what? determined by the examiner. So we already have the amount. The examiner has already given us that, or the total withholding tax credit note. In the question, the examiner has told us that the total withholding tax credit note, available to the company was this. So they already have the claimable. So what we are left is what the payable. So which we are going to get from these expenses. Expenses, payment to supplier. So payment to supplier. So what category of, under what category can we categorize this transaction in line with the withholding tax transaction? Payment to supplier. Oh yeah, under what category? Under what category here can we classify that payment to supplier to? Is what? Under what category? Is what? Supply or rendering of supply or rendering of services. So which we have for company resident 2%, non-resident 5%. So this just tell us that what? Payment to supplier. So, and please, examiner did not tell you that the value, the direction that the examiner did not tell you if the value is what stated at gross or net. Please, you are going to assume that the value is what? The examiner did not state whether the value is gross or net. You assume what? You assume gross value. So payment to supplier. So the withholding tax rate is what? 2%. So you are going to calculate to get the withholding tax. So payment to supplier. So that will be 2% multiplied by the value. How much is the value? 506,250,000. 506,250,000. So that will give us in 1,000. So these are in 1,000 naira. 1, 2, 3. So that will give us how much? So that will give us a value of what? 10,125,000. That gave me 10,125,000. Payment to supplier. So relevant tax authority supplier. Who are going to be the supplier of this global logistic? Relevant tax authority. Oh yeah, now supplier. Who will be the supplier of this global logistic limited? Supplier of global logistic limited. Who will be the supplier?
FIRS.
So why is it FIRS? Why is it FIRS?
It's a
Why is
limited
it
company.
FIRS?
It's a company. It's not an individual.
So it's a limited. So because it's a company, so that means all their supplier must also be company, Abi. So the relevant tax authority will be both FIRS and what? State Internal Revenue. SIRS. The name of the supplier is what? Is it given to you? Did they tell you the name of the supplier? Hello? Is the name of the supplier given to you in the question?
Okay.
Oh yeah, now answer now. Did the question give us the name of the supplier? Go and check the question now. Do we have the name of the supplier in the question? It's not given to us. So look at it. They just said payment to supplier. They did not tell you. So the fact that this particular agent is a company, that does not mean that what all their supplier will be company. So as a company, that does not mean you don't deal with enterprise. So this relevant tax authority will be both what FIRS and what State Internal Revenue Service. So what they also deal with what with enterprise and what individual. So after that, we have a management fee paid to what Koshemani Consult. Management fee, payment fee. What category? Management fee. The withholding tax rate on management fee. Management fee. Multiply by. So the withholding, the gross amount, which is how much is the gross amount? 45 million. Kochemani Consult, 45 million. 45 million. So that will give us 45 million to Kochemani Consult. What will be the relevant tax authority?
Yes.
Kochemani Consult. If they say something is a consult. Yeah? Internal Revenue Service. Yes. Because a consult is going to be what? An enterprise. Then we have what? Audit fees. What is the withholding tax on audit fees? That is what audit fees.
5%.
5% multiplied by how much is the value? 10 million. Audit fee, 10 million. 10 million. So that will give us 500,000. So what will be this relevant tax authority? We talked about audit firm earlier when we started this. When we were doing that relevant tax authority. What will be the relevant tax authority? That first question we did, we made mention of here. For audit fees. Oh yeah, now audit fees. Relevant tax authority.
State.
What are audit firms? What are audit firms? Audit firms are usually, I mentioned it earlier, they are usually state firm of what? Partnership business. So State Internal Revenue Service.
Yes.
So after that, we have what? Administrative expenses. Under the administrative expenses, we are not told of what? Of the breakdown. That will it may be what? Wages and salary may be transaction that what? That will not attract withholding tax. So in that case, that will not be subject to fee. Is legal and professional fee subject to withholding tax? Legal and professional fee. Professional fee. How much? At what rate? 5%. 5% multiplied by, so what is the, how much is the value? 7.5 million. $7.5 million. Professional fee multiplied by 7.5 million. So that will give us 37. So what will be the relevant tax authority for legal and professional fee? Your firm of your chamber, legal practitioner chamber, what kind of firm are they? Are they company or partnership or individual? Your professional fee, consultancy fee, and so on what is their nature of their business? So what will be the relevant tax authority for legal and professional fee? Yeah? Yeah? Is what? State internal revenue service. So state internal revenue service. So those are the words. So the next one, note the total withholding tax credit note available to the government was this. So they cannot use this withholding. So this credit note has nothing to do with what? This withholding tax payable. So and all the transactions given above for income. So the income we only give rise to what? Any of the transactions that they suffered withholding tax on the income, we give rise to withholding tax claimable. But the question has already what? Solve the withholding tax claimable and give it and provide you with what? With the credit note, the value for the amount claimable already. So we only have what? The withholding tax payable. So this will give you what? The withholding tax payable. So which are payable to what? To each of what? Each of these what? So this will be what? Either to federal, depending on what? On the taxpayer, either to federal or state internal revenue. Why all this will be to what? State internal revenue of the resident of what? Of the particular taxpayer. So that's how to what? That's how to compute what? Withholding tax. So when you are asked for computation of what? Of withholding tax, please. So you may be asked for the computation of withholding tax. So very important. So that is what the computation of the withholding tax. So any question? So any question? So you can see from the, so under this thing, we didn't put the, so you can see note, the withholding tax credit note are not available to offset withholding tax liability as it will only be utilized by the company. Withholding tax is remitted in the name and tax identification number of the beneficiary. Administrative expenses may not be subject to withholding tax depending on the specific services involved. Given the fact that the nature of the services involved are not specified, therefore, administrative expenses are not treated as subject to withholding tax. But if you are given a question, if they give you the breakdown of the administrative expenses, if there is any transaction there that attracts withholding tax under the administrative expenses, please don't say because it is administrative expenses, don't ignore it. So that transaction that attracted will also be what? Subject to withholding tax. So that is how to calculate and compute what? Withholding tax as applicable. So any question?
Yes, we have treated withholding tax claimable and how to deduct it. So how do we treat the payable?
How do we what?
Treat the payable now.
And now payable, you pay it to the relevant tax authority now. There is no treatment for it. You pay it through what? That's why we have what? When we have a payment schedule. So when you want to pay it, you do the schedule. So for like this one now, like this transaction we have, for each of the tax authority, you are going to do schedule that will go to each of the tax authority. So it is that schedule you are going to present to the tax authority through the bank. You present it to the bank. So in which one, with the appropriate payment. So in which one, they are now going to give you what? The withholding tax credit note. So there is no treatment. So the treatment of payable is what? You go to the bank with your schedule to what? To pay to what? To the relevant tax authority. You know you are not claiming it. It's what you are paying to them. It's the one you want to claim. That's what you have to claim.
Okay, thank you. Don't mind me. My head is already in accounting. Thank you.
Okay. So any other question? So any other question? So in the absence of no question, so this is where we are going to end the class today. So the class will continue next week. So by God's grace to look at another aspect under our syllabus. So thank you and have a lovely day ahead.